For a short time after the initial interest rate hikes last year, the market took a bit of a breather, and the higher borrowing costs have relieved the demand for housing. This seems to have been a limited time offer because the moment January rolled in this year, the demand came back with a vengeance. Not only that, the sellers have been disincentivized putting their homes on the market because they would be trading their 2% or so mortgage rate for a 6% mortgage rate when they buy something. This creates more supply crunch in the market, and competition between the buyers is only accelerating at this point. Hey guys, it's Ivan. Today I'd like to chat with you about the real estate markets in the Toronto and the GTA area, specifically what happened in the month of April. We're going to take a look at some statistics, take a look at some numbers, and figure out where we stand in the market right now and where is it all going for the rest of the year. There's a lot to unpack as always, so buckle up and let's begin. As we know, the markets have experienced their all-time highs in the first quarter of 2022, which was followed by the extremely aggressive tightening cycle that started in March and ran throughout the course of 2022. The higher borrowing costs destroyed the demand because many people were not able to afford their homes anymore, and even more people were sitting on the sidelines waiting to see what's going to happen to the market. And this was going on until the first week of January of 2023. This is where we saw quite a significant increase in demand for housing. This demand was faced by a severe supply crunch this time because the sellers were disincentivized selling their homes. Generally, when people sell their homes, they also want to buy something because they want to stay in the market. This year, it would mean that people who negotiated their 2% mortgages or so 2-3 years ago would be swapping their mortgage for a different property at a 5 to 6% mortgage. So many of them do not want to go ahead and list their homes for sale. Instead, they prefer to sit on the sidelines and see what's going to happen to the market going forward. So just like last year's lack of demand has put a downward pressure on the prices, what we're seeing this year is exactly the opposite because the increased demand and lower supply of available listings creates an upward pressure on the prices. And so the average sale price in April has reached $1,150,000. It was a drop of 7.8% year over year. But what we're seeing continuously this year is that the market is on its upward trajectory, and the prices actually improved 4% on average month over month. There were 7,531 sales combined between the city of Toronto and the GTA, which again was an improvement month over month and quite a big jump at that, 9% overall, but it still was down 5.2% year over year. And to illustrate my point of the supply crunch that we're experiencing this year, the new listings went down by about 7,000 total listings from last year. So last year we saw 18,416 listings in April coming out to the market. In April this year, we only saw 11,364. And we don't actually see a major improvement month over month. It seems like people will be holding to their properties and not listing for sale until the borrowing costs will come down. So month over month, we only saw an increase of new listings by 1.6%. It takes about 71% longer than last year to sell a listing in this market, but the time on the market also becomes shorter as the demand pouring back and not able to meet the supply. So for example, last year it only took about 10 days to sell a listing. This year it's taking 24 as of April, and it seems like it's only going to become shorter now that more people are out to play. What's interesting is that the market never dipped into the buyer territory despite all the interest rate hikes of last year. In fact, it stayed in the neutral zone throughout 2022. And this year, we're seeing a comeback of the seller's market pretty much as of March of this year. And the way we look at that is by looking at the sales to new listing ratio. The moment that ratio exceeds 60%, that's when we know that we are in a seller's market. And we are actually seeing pretty steep rise in that ratio. There was an actual jump of 4% since March of this year. In March of this year, it reached 62%. Now we're looking at 66% in April. One factor that will bring even more demand into the market this year is the current situation with the rental units. We're experiencing a severe supply crunch in rental units, represented by 1.7% vacancy rate, which means that out of all units available, only 1.7% are vacant at any given time. It also doesn't help that the new rental listings are down this year by 9.2% compared to April of 2022. This creates a tremendous upward pressure on the prices, which becomes extremely attractive for investors. It also becomes attractive to renters to go back into the market and buy a unit, because the difference between what they pay for rent and what they would be paying for mortgage becomes less and less significant. At the beginning of this year, it became clear that the higher borrowing costs would make buyers favor lower priced property types such as condos and townhouses more so than the higher priced property types such as semi-detached and detached. So it was very interesting to see this April noticeable shift from condos to detached homes again, which was characterized by 15% bump in sales, which was the largest month-over-month increase of all other property types. This drove the prices for detached homes in Toronto up by 5%. Semi-detached sales came a close second to the detached, with a 13% increase month-over-month, and the prices grew by 4.4% month-over-month. But the prices of townhouses experienced the most significant jump month-over-month by 5.4%, and condos showed the most modest price growth of only 2.9%, and the sales grew by only 1.8% since March of this year. So now let's take a look at the year-over-year statistics and see how each asset type has performed in both City of Toronto and the GTA. We're going to start with the City of Toronto, and we're going to look at the home prices. And detached properties are actually down 8% year-over-year. Semi-detached are down 11% year-over-year. Condo townhomes, there was no difference, 0%. Condo apartments dropped by 8%. That's since last April. The sales in Toronto also experiencing a drop. Detached homes saw a drop of 12%, semi-detached 25%, condo townhouses only saw 12%, condo apartments actually saw 2% less sales compared to April 2022. Things are looking similar in the GTA as well. Detached homes dropped by 9%, semi-detached dropped by 10%, condo townhomes dropped by 4%, and condo apartments dropped by 8% year over year. And the sales in the GTA also dropped by 4% for detached, 21% for semi-detached, a drop of 10% for condo townhouses, and only 1% for condo apartments. Anyway, guys, I hope this was informative for you to make your own decisions and opinions about the market. But if you want to chat a little bit more about it with me, feel free to contact me. All my contact info is below, and I'll see you next month. Take care. Bye-bye.